Calaba, Cavite, Laguna sa Batangas area. But much of the new supply, of course, will be coming from Batangas. We're seeing manufacturing rebounding, and this will have a positive impact in terms of industrial space absorption. But the cold chain segment has been a stable subsector, and we see this sub-segment driving the demand for more warehouses as well as industrial parks and related facilities moving forward. As you can see here, vacancy even declined to 5.2% second half of 2021 from 5.7% the first half of the year. Now, for industrial lease rates, there has been a decline. We saw industrial factory lease rates declining, mainly because of negotiations waged by locators, probably also because of some decline in manufacturing output in previous quarters. But we're likely to see this turning around over the next 12 months and likely to see a recovery in terms of industrial lease rates moving forward. As I mentioned, there will be new industrial supply in northern, central Luzon, as well as southern Luzon. Most of the new supply in southern Luzon, of course, will come from Batangas, Cavite, as well as Laguna. So this is a good indicator also for the industrial sector because investments, foreign direct investments are increasing. And if you look at the movement during in 2021, we saw investments peaking in July, but there has been a modest growth, especially during the latter part of the year, starting September and October. Now, Region 4, unsurprisingly, Colliers bulk of foreign direct investments to the Philippines, and much of these investments are manufacturing. So as you can see, it's really the manufacturing and IT, BPO related investments that dominate in terms of the profile of investments that enter the Philippines. But the bulk of this is still from the manufacturing segment, and most of these investments are funneled into the Cavite, Laguna, Batangas area, which should benefit the industrial parks in the region. Now, the Philippines Purchasing Managers Index score is more than 50%. So a more than 50% figure indicates a positive activity, more brisk activities in the manufacturing sector, and that should again benefit the industrial locators, the industrial parks, as well as the developers of warehouses in northern, central Luzon, as well as southern Luzon region. So a lot of companies are being urged to invest in the Philippines. So you have the likes of medical manufacturers also being lured to invest in the Philippines, and they're being enticed to put up shops, factories here, mainly because of the amendments to the government's taxation. They're being offered lower tax rates. And of course, they are able to take advantage of the perks of locating within industrial parks, including automation of transactions and the continuous improvement of infrastructure in the Luzon areas such as Cavite, Laguna, Batangas, the Calaba region. Now, we are also seeing new companies, as I mentioned, a lot of pharmaceutical manufacturing companies are planning to invest here. And in fact, the Philippines is planning to put up the country's first pharmaceutical ecozone. And this is the first Bulacan business park, which is being positioned as the government's first pharmaceutical ecozone. The total project cost is 570 million pesos. The total land area, that's 259 1,000 square meters. Now, supporting the development of more manufacturing sites, of more industrial spaces, is the continued increase in the supply of warehousing and logistics centers. As you can see here, Metro Manila, we still have these logistics facilities being positioned strategically across the capital region and are strategically located near the infrastructure projects that will be completed over the next 12 to 24 months. You have the likes of MRT 7 and of course the recently completed Skyway 3. Now, more logistics firms are likely to lease out industrial space. This is the new B Station Logistics company, which recently inked a deal with Laguna Techno Park. You also have Fast Logistics, which opened its cold chain facilities in Cebu and Cavite. So, interestingly, it's not just Northern and Central Luzon and Southern Luzon that are cornering just cold chain investments or warehousing investments, but also the likes of Cebu and Cavite. So, as I mentioned, the cold chain segment is a subsector that continues to drive the property market, especially the industrial sector. As we previously highlighted, the Colliers is hot on the cold chain sector. But according to the Cold Chain Association of the Philippines, these are just some of the factors that will help drive the demand for the cold chain asset sector, for the cold chain segment moving forward. And this include the population growth and, of course, the growing purchasing power of Filipinos, consumer preference shifting to frozen food products. So this will be needing more cold chain facilities. Also, economic recovery, which a lot of analysts are projecting to hover between 7 to 9% for 2022, and the increasing use of e-commerce platform. Again, this will support the need for not just warehouses, but also for these cold chain facilities. The Philippines is gearing towards the listing of the first industrial REIT. So again, this is one development in the industrial REIT segment that we need to closely watch out for. The worth of industrial leasing portfolio is 24.8 billion pesos. So that is a big amount. But we just wanted to list some companies that already tapped the REIT market, but again, one opportunity that we also have to look at the REIT market is the proliferation of developers with industrial assets that will also tap REIT. So this is a very interesting development in the property sector as well as in the REIT subsegment. So we just want to highlight also the advantages of locating in an industrial park. And of course, these are just some of the factors that industrial park developers need to maximize and highlight. And this include the flexibility or the ability to easily reconfigure the facilities, the industrial assets, the potential for customization. You also have well-maintained road networks, which should support the movement within and outside of this industrial park. You also have subsidized utility rates in these industrial parks, so that should benefit, especially manufacturers, which are power cost sensitive. And the most industrial parks are designed to produce minimal waste and harm to the environment. And this is a plus, especially for the sustainable and eco-friendly industrial locators. So same with other segments, we also want to highlight the industrial recovery enablers. So these are, of course, the industrial REIT, which I already highlighted earlier, the improving growth in manufacturing activities, the continued improvement of this segment beyond 2022, continued inflow of foreign investment, which the Philippines has been seeing to improve, especially latter part of 2021. E-commerce activities, which continue to thrive and which really appeals to a young domestic market. And the need for booster shots to raise demand for cold chain assets. Of course, it's not enough that you're inoculated with your second COVID-19 vaccine, but it's also important that you have your booster shot, and the demand for more vaccination will also drive the need for more cold chain assets. And again, that should fuel the demand for industrial space absorption. So, what are the factors that we need to watch out for? Again, some of the more obvious ones, more cold chain investments that we will definitely see beyond 2022, the launch of industrial REITs, and the ratification of a lot of trade deals, including the Regional Comprehensive Economic Partnership, which should entice more foreign investments, manufacturing investments, especially to the Philippines. So some recommendations that we want to offer to a lot of industrial park developers highlight advantages of locating in an industrial park, which I already mentioned earlier. Take advantage of government perks, including ease of doing business, streamlining of business registration, as well as tax perks, lower corporate tax rates. The demand for cold storage facilities again will continue to increase. So developers should proactively tap the demand for this segment and monitor the profile of incoming investors. We have a lot of trade deals and more foreign investments entering the Philippines. So the developers should also be proactive in looking at the profile, because these locators will have different requirements in every industrial park, in every warehouse. They'll be requiring more sophisticated warehouses and automated systems. So the developers should actively and comprehensively assess the needs of these investors. So, looking at the Philippine property market beyond 2022, what do we have for you guys, especially what do we project beyond this year, beyond 2022? For office, again, I think Dom mentioned this earlier, there'll be a sustained take-up from the outsourcing companies, the IT BPM sector. There'll be more leasing outside of Metro Manila. You have more supply in Cebu, Iloilo, as well as Pampanga residential segment. There will be a greater demand for horizontal units, the shift to suburbia, as we highlighted earlier, rise of the north. So you have Bulacan and Pampanga attracting a lot of residential investments, and the development of infrastructure in these locations will further drive the attractiveness as property investment locations moving forward. For retail, there will be new players, and we expect that because of the recently enacted retail trade liberalization. Revenge shopping and dining will redefine the segment's recovery from 2022 and beyond. Revenge travel will of course, anchor the growth of the hotel sector. So you have the domestic market dominating still, but there will be a gradual increase in foreign arrivals, although we do not see an immediate increase, mainly because of global travel restrictions, some international travel associations, some projecting a global travel to only recover to pre-pandemic level by 2023 or early 2024. And of course, for the industrial segment, manufacturing will continue to lead industrial space absorption. Developers will continue to ramp up supply, especially they see a more demand for industrial spaces and warehouses, and infrastructure will continue to support the growth of this segment, especially with the passenger rail and cargo rail lines that will be completed beyond 2025. And trade deals and partnerships with other countries will also buoy manufacturing investments and further drive the demand for industrial spaces. So that's our forecast for 2022. So we are definitely seeing light at the end of the tunnel. And in fact, we just released an Outlook report titled Bound for Rebound. And I do encourage you to download our report It's on our social media sites. And speaking of social media, we will also be releasing our Colliers Insights podcast. This will be on Spotify. So I also encourage you to listen. There'll be snippets of what we see in the office, residential, industrial markets. So I think this will be released over the next few days. And that the Maiden podcast